Running a record label tax-free sounds great to everybody, and I feel you because I don't want to pay any taxes either. But can you really run a record label when you're just starting out tax-free? Because I know these taxes are a little bit ishy. I'm going to try to be as clear as possible with explaining how my method works in running your record label tax-free. Coming up right here on the Music Money Makeover Show. Hey everybody, welcome back to the Music Money Makeover Show. My name is Casey Graham. Let's hop right in. So the first thing we got to get into here are write-offs. What are write-offs? Let's cut to the chase and break down what write-offs are. They are expenses that are necessary to keep your business running. In many cases, for artists, it encompasses all of the software and apps to run the business and create the music. That's a simple thing, right? But think of any software. People don't think software is tax deductible, but it is. This also includes all the education and courses you take, like mine, to learn all of the costs incurred with the production of your recorded music and live shows, including the temp labor and the full-time labor, plus much, much more. Now, I know a lot of you all know this stuff, but let me explain to you how you should think about the write-offs so it becomes easier for you to understand. How write-offs should be interpreted. When spending money, hear this out. When spending money, write-offs should be interpreted as the expense minus the tax rate will equal the final price. Whatever the tax rate / bracket you're in will dictate the discount you get on your purchase, ultimately decreasing your tax bill / liability. Now, the only way you get this discount is that you set money aside for taxes already in a separate account. It's a little bit of a process to explain that. That's not a YouTube thing, but you set the money aside in the tax account and it's sitting there because you got to pay your taxes quarterly. And if I go spend let's say I go buy something that costs $100 and I'm in a 15% tax bracket, then I take 15% of the money out of the tax account and I discount that 15% from the expense and I get my final price. So ultimately, instead of spending $100 for that piece of gear, I'm technically spending $85 because now I'm not going to have to pay tax on the money that I earned. I earned $100. I set 15% aside. I bought something that was $100. So I took that 15% back out that account and I paid for the item, which ultimately decreases $15 off my tax bill. And I get a new piece of gear. That's how that works. Now, let's dig in a little bit more. Self-employment tax. The self-employment tax rate is 15.3%. That rate is the sum of 12.4% for Social Security and 2.9% for Medicare. Self-employment tax applies to net earnings, or what many call your profit, okay? This is for all my do-it-yourselfers, everybody who's in the 60-day record label system. Now, there's one big difference between self-employment tax and the payroll taxes people with employers pay if you work a regular old job. Typically, employees and their employers split the bill on Social Security tax and Medicare tax. You pay 7.65% out of your check, and your employer pays 7.65% out of their profits, okay? But in your case, since you're a do-it-yourselfer, record label owner, you're self-employed people pay both halves, which is the 15.3%, okay? Now, this is what you're going to get just for yourself here, right? Your standard deduction for you personally. If you have expenses that exceed this amount right here, then you can get those expenses as well. That will be listed on your Schedule C. Just follow me here. But I'm going to just act like for most of y'all, $14,600 is all the money you're going to spend. All right, let's keep going. Let's talk about our federal tax rate. Okay. So when you start out as a DIY label owner, you will be in one of the 4 tax brackets when it comes to the IRS, 10, 12, 22, or 24%. And I hope that you're not sitting in the 24% tax bracket and you haven't switched to an S-Corp yet, because you're really paying a high amount of taxes at this point. It's ridiculous. Okay, most of you all are going to bottom out at that 22, okay? Now, let's go to the state tax, because we got to tack this on too, all right? So we have our self-employment tax, 15.3%. We got our standard deduction, $14,600, and we got our federal tax bracket. Wherever you are, you can pick yours, okay? State tax. Here's your state tax. I don't know where you at, but if you in California, Oregon, Minnesota, or New York, New Jersey, Massachusetts, or Vermont, sorry for you. I don't know, you know what I mean? I don't even, or Hawaii. I don't know what to tell you. If you're in Florida, Tennessee, Texas, South Dakota, Wyoming, and Nevada, or Alaska, you good to go because you ain't got no state tax. I'm in Georgia. I got a 5.49% state tax rate. For those of you all who don't know, this will reduce in the next 4 years to a flat 5%, just like Alabama. Everybody else, we sitting in the middle. All right, so pick your state tax and let's throw it in the bag too. Now, let's run the equation. Let's say in 1 year you make $100,000 gross income. All right, from that, we got to take out our standard deduction. Let's just say our expenses never exceeded the $14,600. This leaves us with a net taxable income of $85,400. Now we begin to run the tax equation. Take out self-employment tax, 15.3%, which is $13,066.20. Take out our state tax, which is, for in my case, it's $4,688.46. And for everybody who watches me that stays in Georgia. And then because our net taxable income is $85,400, we are in the 22% tax bracket. Now, I know that that is not 22% of 85,000. That is because in federal taxes, taxes move in buckets. They move in buckets. So I'll explain it really quickly. For the $85,000 400, we'll take $11,600 out. We'll take the difference of this and we'll slap it in that bucket, and whatever's left, we'll slap it in the 22% bucket. We average out how much went into each bucket, and our effective tax rate, for those of you all who use TurboTax may have seen this, or just do taxes period may have seen it. Our average tax rate is 16.2%. That is $13,841.10. We take that out. Okay, you might say, man, that's a lot in taxes that we got to pay. I hear you. Now, after the taxes came out, we were left with $53,804.24 of net profit. This is all hours in our pocket out of the $100,000. Okay, we paid $31,595.76. You see how high this is? But this is roughly $2,600 a month in taxes. So let's say, for those of you all who say, I don't want to pay no taxes, I want to get rid of all of this. Well, in order to get rid of this tax bill, you'd have to spend $85,400, all the money that was after the standard deduction. We'd have, because, you know what I'm saying, that's how much we had to spend to X out all of this. $85,400 in expenses eliminates $31,595.76 in taxes, leaving the business at zero. I'm explaining in a minute, you don't want to do that. However, you can slash it in half. You know what I mean? If you want to spend a little bit more of this money on some tax write-offs, you can. Remember, I only took out $14,600 as a standard deduction. If you got a little bit more money to spend, you want to spend another $14,000, you can. It will decrease this tax bill right here. You see what I'm saying? The more you spend, the more you will decrease this bill, but the less you will have a net profit left over to either build the business or stash in your pocket for personal savings and spend on personal things, because we can't commingle funds between personal accounts and business accounts. You don't want to do that. I talked about that before on this channel. Is not paying taxes a good thing? 99% of the time, no, not when you're self-employed. Why? Because you need the net profit to live on. $53,804.24 is your salary. So you may need it for personal savings and investments, which I recommend. Also, you can't pay personal bills with the business, like I just said. So to run the record label tax-free, we have to spend all of this money. We have to spend all of the money that the record label earns in a year's time span to not pay anything in taxes. All on things that could be written off. Okay, depending on your tax status and what you're claiming as a tax status, there's other things that you can do. I'm not going advanced. This is just very simple. All this money would have to be spent in order for the business to be at zero taxes, and it is now ran tax-free. I hope you spent some money on a new SSL console or something, because I don't know what you know what I mean? Like, come on, man. Anyway, it's tax-free. How do you run it tax-free? Spend the money. All right. When should I switch to S-Corp? Because I know you asking. S-Corp is all about tax status. Based on our example, making the switch is only saving you roughly 5% at 100K. At the moment, if you're switching at around 100K. However, as your business continues to grow, your living expenses become way lower than what the business makes at 200,000. Let's say you double it in the next year. And by that point, the money starts to go through the roof if you know what to do with it. Now, what are good expenses for the record label to write off? Well, I recommend that everybody if you're getting all the software and the apps, video editing stuff, plugins, whatever, all them software, accounting stuff, QuickBooks, all that can be written off. Website subscriptions, just subscriptions in general, studio fees, engineers fees, advertising fees, production fees, artwork, music videos, gear for the studio and live shows, business travel expenses. This is really where the bulk of your money is going to go if you're making it real fast. You're going to start to move around and travel from here to there to go to studio sessions and whatnot. And pretty much everything it takes to produce and promote your products. So you will actually really decrease that tax bill a lot. If you're adding that, if you're spending the rest of this money with all this stuff, you can really decrease that tax bill. Okay. Now, if you are a artist, a new music exec, a singer, songwriter, producer, it doesn't make a difference. If you're building this record company that we've been talking about and you want to run it tax free, I got you covered because you're going to build it in 60 days or less without searching all over the internet for how to do it. I'm going to be with you when you build this LLC that's going to support this tax-free business, and you'll learn how to play the game via contract so you won't get lost in the sauce. Plus, you'll be able to collect your domestic and international publishing royalties without the middleman taking 15%, because nobody wants their hands in our pot and in our money when we got to pay all these taxes anyway. All the stuff in the bottom right-hand corner is included in the course. Click the link below to get started today. All right. But if this is your first time watching the channel, 10 major steps to increase your record label profits is in the links as well. A free split sheet is included with the download. Now, paying taxes below $100,000 increases your retained profits, which gives you available capital to live on and reinvest into the business. That's what happens when you pay the tax. You will have retained profits. All right. The reinvestment part is the heavy part that you want. Okay, now, not paying taxes below $100,000 causes your business to run at a break-even point or a loss. This could be good or bad depending on your strategy. However, at some point, you will want to turn a profit within 5 years before the IRS audits your company. All right, music money makers. So if you were wondering how this tax strategy or a tax strategy would play into your record label strategy, you now have a little bit more information as to what you need to do to run your label a lot more efficiently than it has been running. Music money makers, if you make music, you should always make money. Log on to musicmoneymakeover.com, jump into the 60-day record label course, download the free stuff. All right, book a call on musicmoneymakeover.com, and I'll see you next time. Peace.